I'd like to welcome our next speaker, Lauren Hulett from Genry. Lauren supports Genry's life and health business teams across the world, basically. She has 18 years of industry experience across several areas of risk management. Is usually based in the Cape Town office, but luckily enough for us today, she's here and is currently working in the London office. Please put your hands together to welcome Lauren to the stage.
Right, so as Jo's mentioned, I'm from Cape Town, so I usually sit in our Cape Town office. And at the moment, I'm working in the UK just for a year, supporting our account management team here. My colleague Itu was meant to present today, and she had to make an urgent trip to South Africa. So I'm afraid you are stuck with me, another South African, for the next 15 minutes. So you may ask why they chose me in place of Itu. And the reason for that is that because I sit in the Cape Town office, I have exposure to my team there, and they are responsible for doing a lot of microinsurance business in Africa. So at the moment, all of us are involved in a strong focus of consumer duty in our market. And as you know, the FCA is very focused at the moment on consumer protection, and they are launching a pure protection study, which everybody I'm sure will be aware of, to understand whether customers are actually getting fair value. And they're looking at other things as well, like products and services, and in addition to that, where the vulnerable groups are basically catered for. So in terms of vulnerable groups, the one that I'm going to speak to you about today are low-income earners who qualify under that category, and how microinsurance can be used to address the needs for this population, whilst also creating opportunities for us as insurers and reinsurers to write business in these underserviced markets. So I could talk for quite a while on this, and unfortunately I only have 15 minutes, so it is going to be a little bit of a whirlwind tour. So I'm going to cover two main key aspects today. So the first one is looking at what is microinsurance, and the second one is looking at other markets that are experienced in microinsurance and what we can learn from them. So we'll focus on some challenges and we'll focus on some solutions as well, and look at the trends that are happening in this industry. So when we talk about microinsurance, what actually is it? And effectively, these are products and processes, and it's important to remember that both are involved, that are customized to meet the needs of these customers. So this involves affordability, it involves product design, and a whole host of other things that we need to consider as well. So in terms of what microinsurance isn't, and this was a learning from our market back in South Africa, it's not simply a case of taking a normal traditional insurance product and simplifying it. So we have to completely redesign and re-engineer and rework these products and processes and services in order to cater for this market. And that's why microinsurance falls under the banner of inclusive insurance, which is what we're focusing on today. So let's just take a look now at who the target market is. So if we look at our global microinsurance customers, what we're looking at here is income per day, which is divided into 4 income levels. So in terms of the first income level at the top, these are typically microinsurance customers who are in extreme poverty. Level 2 and 3, that's typically where microinsurers will focus, and those are customers who are earning between £1.6 and £16 per day, which is obviously quite a low income part of the population. And then level 4, these are the customers that we traditionally offer insurance to at the moment. So how does this actually translate into microinsurance in a UK context, given that we're quite a high income economy country? So if we look at this, this is a report that the Roundtree Foundation released for 2024, and it looks at the weekly disposable income and compares that with what is needed to meet the minimum income standard for a socially acceptable standard of living. So as we can see here on the left-hand side, this is looking at single working age adults. So for an adult who's working full-time on the national living wage, they only have 77% of the income required to meet the minimum income standard. That increases slightly to 82% for couples that have 2 children, 2 young children, where one couple one person in the couple is working and the other person is part-time. The situation looks even a little bit more dire for lone parents who also have 2 young children, where the one parent is working full-time, and that goes down to 69%. The other thing is the cost of living crisis in the UK, which you'll all be very familiar with. And the FCA has released a stat which significantly indicated that a lot of people in the UK lack financial resilience to cater for unexpected costs. So it seems that there really is a business case for microinsurance in the UK market. So if we look at this, what are the characteristics of the insurance market in terms of microinsurance? And the first thing that's extremely important is trust. So we must remember that a lot of these customers are entering the insurance market for the very first time, so trust is key. The other aspect of it in terms of trust is paying claims quickly and making sure that the customers understand what they're buying so that the claim does pay out when they're expected to. In terms of flexibility, that's extremely important. So when entering other African markets, South Africa insurers had many different assumptions that they made. And one of these was in terms of the payment frequency. So most people expect to get paid monthly, and a lot of the low-income workers are actually getting paid weekly. So they had to very much adjust the payment frequency patterns and also the payment methods. So a large proportion of this population remains unbanked. And that is true for both the UK and other markets as well. So customer incomes can be quite volatile. So what they've also done is they've allowed partial cover. So if it comes to a stage where the customer cannot pay the full premium, the cover drops in relation to the amount of premium they can pay so that they are still covered to some extent. And I think we all know that non-traditional payment methods are necessary in this market. So as I said, a lot of people are unbanked and the rates are very low of that in emerging markets. In terms of simplicity, the key here is that it's really important that the products and the processes are very simple. The price is typically not dependent on a lot of factors. So there's often a homogeneous price, one price for everybody that is covered. Occasionally, insurers will differentiate between age and gender, but that isn't incredibly common in the markets that we have experience in. In terms of affordability, low sums insured obviously help in keeping the costs down and also provide customers with the opportunity to pay in small installments, even daily sometimes, to allow them to be able to afford their premiums. So just in terms of microinsurance experience, as I mentioned, I have a bit of experience in the South African market, and a lot of our clients in South Africa have expanded into Africa. The other markets in terms of Latin America and Asia, Itu had extensive experience in that, so she shared that with me, and I'm going to pass that on to you. So all credit to her for that side of things. Okay, so if we look at microinsurance penetration rates, they still remain very low. So in Africa, you can see that they are hovering around 8%, and that goes up to 13% in Latin America and the Caribbean. In terms of penetration by product lines, you'll see here that life cover definitely forms a majority of the products that are sold in the microinsurance space, and that's followed by credit life and then health and hospital cash type of business. In terms of the distribution, it varies quite a lot across the different regions. So Asia, Latin America, and the Caribbean, the microfinance and financial institutions definitely dominate distribution there. And in Africa, the agents and the brokers are extremely popular. They go out into the communities and they educate the people on what insurance is needed and how it pays out. In terms of payment methods, these vary quite a lot. And as I mentioned, alternate payment methods are necessary. And at the moment, direct debit is quite popular in Africa and cash is very popular in Asia. So all of these different types of payment methods one needs to be able to account for. Okay, so let's look at some of the challenges that the markets that I've mentioned have experienced, and then also some of the solutions that they have come up with and the trends that we're seeing in those markets. So one of the main issues was around the microinsurance model itself. So a traditional microinsurance model relies very heavily on distribution, but unfortunately with that comes very, very high distribution and administration costs as well. So they account for around 70% combined of the total premium. So the challenge here was that distribution was done through a lot of mobile operators, and they were demanding extremely high commissions because not only were they providing the insurance through the mobile phone, but they were also responsible for premium collections. So a lot of the time the commissions were very high, but they were also ongoing. So as a result of that, combined with low customer awareness, we can see that the claims ratios were quite low. So claims of the total premium were very low, and that again just raises a concern and the question around customer fairness as well. And the result of those things combined was pretty much it's very unsatisfactory in terms of the margins that insurers are making. So the margins were either low or negative. Some other challenges that they're experiencing in the market were around premium payments. We've mentioned there about the frequency and the methods, and it is definitely an issue in the UK because a lot of them are still unserved in terms of banking. They also found that the lapse rates were extremely high. So first-year lapses were around 70%. We didn't have numbers for the NTU rates, but those were also quite high in the beginning when microinsurance was launched. There's also quite a lot of poor insurance awareness, unfortunately. So this is linked to the low-income population and also the fact that they don't have the education necessary to know what financial means they need. No doom and gloom. This is actually changing. So I need to speed up a little bit. I've only got 5 minutes left. So I'm just going to take you through 2 examples of micro-insurers in the African markets and Asian markets. So BMO offers mobile micro-insurance products. And what they've done on the distribution side, which was very innovative, was to combine a hybrid model of mobile technology with broker distribution. So the brokers go into the communities, they educate the customers, and then the customers facilitated after that in terms of registering and buying the insurance. The type of products that are offered by this company, life cover, accident cover, and some of them even offer permanent disability. Health products are relatively popular, not so much as life products, and no longer are they just offering hospital cash plans, but they are adding on all these other benefits, more tangible benefits like telemedicine and allowance for medication prescriptions and so on. In terms of premium payments, it was quite clever. They decided to use prepaid airtime in order for customers to pay their premium. It was easy, simple to do, and facilitated that for the customer. The second one I want to talk about is Vodacom in South Africa. So this is a mobile operating provider. In terms of distribution, they've decided to diversify their distribution methods. So instead of only offering on mobile, they're now offering it through funeral parlors, and they're also looking at social influencers to distribute their products. In terms of the products themselves, they've created a modular product, and this is a funeral benefit, is a core benefit, and then they've added on other things again in order to diversify that benefit. So there are some covers that allow for the outstanding contract balance to be paid on the death of the customer. They have repatriation services, chronic disease benefits, and advice services as well. And then in line with the point around premium frequency, they've got a weekly pay product. And again, that's for nano insurance, so really small sums insured, I think around £3. In terms of premium payments, they have an add to bill feature, which basically allows the customer at the press of a button to add their insurance premium to their subscription for their phone. In terms of the NTUs, they realized that these rates were quite high, and they decided to simplify and improve the customer journey, and that resulted in an improvement in NTU rates of about 10%. Okay, so there are quite a number of other market trends that we're seeing at the moment. In terms of distribution, a lot of companies are now trying to generate their own leads to keep the commission levels down. They are definitely marketing through retailers. So back home in South Africa, a lot of supermarkets are now transacting insurance. And then we've realized that obviously we do need the human touch. We can't just have the digital option. So a lot of hybrid models are being used in the market. In terms of the products, as I mentioned, there's a move towards more tangible products, and some insurers have now started doing basic underwriting where they ask about various serious conditions, but very limited underwriting. In terms of awareness, on the claims side, they are running claims campaigns, and they are focused very much on faster claims payouts. So around South Africa, I think it's around 2 days in which they pay a funeral claim, which is pretty fast. There are many different premium payments in terms of the methods that are used. The one that I want to highlight is a digital cash combination. And basically, the customer is provided with a QR code, and it's a unique QR code. They can go to the retail store or the supermarket, and they can use that in order to pay their premiums and also receive their claim amounts. So all of these market developments together and innovations have actually led to an improvement in the profitability, and all the adaptations have increased sales as well. So just in terms of conclusion, the takeaways for today. So this is not just a global concern. Inclusion is definitely a concern in the UK as well, and we've seen that there are underserved markets here. So more can be done to drive growth. We have started to develop products already that reach the low-income earners, but not necessarily the microinsurance market. So in order to understand the market and to be successful in it, it's crucial to understand who the target market is, not just what they need, but also what they want, and how to go about distributing that in terms of the actual distribution methods and the payment methods as well. And then we're quite lucky in the UK for insurers who do want to explore offering microinsurance in this market. We can learn from the experience in the other markets that I've mentioned, so Latin America, Africa, and South Africa as well. And they've set the way and paved the way for us to make headway in this market. Thank you.